Obviously, we're talking about December 2022 tonight compared to 1 and 2 years prior. Obviously, it's not so much the 1 month results that are interesting. It's more the trend and how things are sort of shaping up over the months and years. As you can see from my headline there, overall, the numbers show that the market around the whole country softened in December. Obviously, we're just talking really about Wellington, and the same was true for Wellington. But is it a blip? That's what I'm asking, because December, the month of December is a strange month, of course. It's typically a very low volume month for sales. And so things can, even with a normal month, things can bounce around from 1 month to the next a little bit. And when you're dealing with a segment of the country being the Wellington region, then it bounces around a bit more. And when you're dealing with Wellington City versus Wellington region, it's a smaller segment again, so it bounces around a bit more. And then if you're dealing with a month that is typically a very low volume month anyway, then it can bounce around a bit more. So it's just not that reliable if we look at this in isolation. You know, one swallow doesn't make a summer, and one bad result in a very quiet month doesn't make can't be terribly conclusive, I don't think. So, but anyway, it is what it is. So I'm just not convinced it's indicative of a new trend, a deviation from the trend that was otherwise emerging. So let's get into it. Median sale price, so $790 in December just last month versus $990 in December 2021. It's down 20%. That's a big drop, of course. But interestingly, you look here at the blue bar chart, you can see there that since July, I think that is, since July, we have had broadly, you know, median prices broadly around 800,000. They haven't really changed since then. The red line shows 6 month moving average, but in 6 months, of course, or in the last 6 months, it's still capturing in the July data. The month before was still capturing June, and so on. So ignore that red line and look at the underlying trend in the blue bar chart. You'll see it's really going sideways for the last 6 months or so. Yeah, as I say here, so median sale price broadly stable since July, and so yes, down 20% over the last 12 months, but over the last 6 months, roughly going sideways. If you follow my videos, or if you come to these monthly updates, you'll know that I don't really pay too much attention to the median sale price anyway, because it is so heavily influenced not just by underlying values, but also by the mix of properties that are sold from 1 month to the next. And so I pay more attention to the real estate house price index. And so that's what we'll look at next. And so if we see here, this is what I was saying, in December, definitely things softened according to this index here. So you can see there that across the whole country, across Wellington, down 2.6% in the month of December alone, 3.8% in the 3 months, and 21.6% for the year. Excuse me while I let someone else in. So if it's gone down by 3.8% in the last 3 months and 2.6% of that in the last 1 month, that means the other 2 months accounted for only 1.2% of that. So it goes down by 1.2% across October and November, and then down by 2.6% in December. That's a big drop, you know, compared to the preceding months. And that's why I'm asking here, look, values have suffered again in December, but is it a one-off? And if we look at the Wellington City part of the region, as opposed to the Hutt Valleys and Porirua City, the numbers are even more stark. So a 4% drop in December, apparently, but 4.7 in the 3 months to December. So that means in October and November, values dropped by 0.7% over those 2 months collectively, and then a 4 percentage points in December. So that's why I'm thinking it's a real big variation from the overall trend that we were seeing. And it's a low volume month. So, it's just not that reliable. And if you look at the graph here, you can see, and now this is for the region, not for the city. And for the city, the graph would be even more pronounced than what we're seeing here. So you can see what the trend was. We were for the month-to-month results, we were seeing drops of up to sort of 5% for the month, 3%, 3%, none, 3%, 1%, 0.5%, none, and so on and so on. And then all of a sudden we're chunking right back down to where we were sort of 6-8 months ago. The smoother, more reliable trend is the orange line, which is the 3 monthly results. So we hit a low of down to nearly dropping 10% across 3 months. And then we were gradually and quite consistently recovering back towards zero. And we were almost back towards hitting zero. And then in December, it's dragged that number right back down again to sort of around that 4% mark. So, yeah, look, these numbers suggest that underlying values did soften in December. My question is it really that reliable? It's 1 month's data, and as we will see soon, it's 1 month where the number of sales that took place is actually very low. So I just wouldn't draw too many conclusions from this just yet. And interestingly, if you look here at the 5-year results, I just thought this was interesting. This is not about Wellington in particular necessarily, but over the last 5 years, the Auckland market has on average gone up by 3.5% per annum. Now, no one would say that's a lot of growth, but it's just an interesting story that's coming through now, is that the Auckland market has not performed that well over the last 5 years or so. Similarly, the Wellington city market has only gone up by 4.8% on average over the last 5 years. The rest of the country is at 6.5%. New Zealand, excluding Auckland, is nearly 9%. So Wellington City and Auckland seem to have they definitely have underperformed the country overall over the last 5 months. And I think that this is just one indicator of many that is now suggesting that Wellington City and Auckland are looking like quite good value compared to the rest of the country. Anyway, we're talking really mainly about Wellington, but I just thought that was an interesting sort of a side point there. So looking at the number of supply, the amount of supply coming on here, and this is pretty interesting. So 209 new listings come to the market in December 2022 versus 349 and 340 for the Decembers prior to that. 209, this is short on stock. This is very, very little new supply coming on. I mean, you see there on that blue bar chart, is there any month since March 2015 that has produced fewer new listings than we saw in December? Now, look, December is a very low volume month for new listings. You can see back there's December 2021. It's the low month of the year. There's December 2020. There's December 2019, and so on and on it goes. In fact, I can see there that December 2019 is concealed, but I don't believe it was as low as what we've seen in December 2022. The only month that is lower for new listings since I collected this data in March 2015 was back in April 2020. And we know the reason for that, and that was the pandemic, the lockdown. So that's when the market was basically closed for 3/4 of the month. And so it's not surprising there. So other than that, this is the lowest number of new listings that we've seen in a month since I started collecting the data in March 2015, and the lowest by a reasonable margin. So this was a really low supply month. So, of course, what does that mean for the market? Well, if you've got very few new listings coming to the market, that is good for sellers. Why is it that there are very few new listings coming to the market? What I suspect is that vendors are realizing, look, it's not straightforward to sell. My friend, my cousin, my mother, my business associate, whatever, my work colleague, they've tried to sell. they've not managed to sell, or they had to take a haircut on what they thought they were getting for their price. I was thinking of selling. I'm just going to cancel my plans. So a lot of people who don't need to sell are deciding just to sit on the sidelines and keep their property for a bit longer. Of course, if they're selling one and buying another, the fact that the values have fallen doesn't make an awful lot of difference. You're saving on both sides, but that's not the way a lot of emotional human beings think. They think my house is worth 20%, 25% less than it was 12, 18 months ago. I'm not going to sell. And there's no unemployment, so people are not under pressure from losing jobs. They've had 9% wage rises on average over the last 12 months or so. So money's still coming in. Overall, of course, there were exceptions to these rules, but overall, there's no financial strain on the market. Mortgage rates have gone up. That is very true. And if you took out a mortgage, I don't know, 18 months ago, and it's now come off fixed rate, you might be paying 2.5 times what you were paying. And for those people, that's quite painful. But only one property out of 3 has a mortgage on it at all. And for those properties that are mortgaged, the vast majority of them were not mortgaged in the last 2 or 3 years. And so their mortgage payment, their mortgage amounts would be quite low, and so therefore the payments that they're making are not a big portion of their income. So and of course 2 years ago the banks were stress testing at 6% anyway, and now they're 7 or whatever the numbers are. So there's no real sort of financial pressure generally across the market. Now that might change, of course, if and as and when unemployment starts coming through, and given the Reserve Bank have clearly announced that they're going to have to hurt the economy, squeeze people's finances to stop them from spending money to get inflation under control. There has to be a good chance that significant increases in unemployment will start to come through. And if that happens, of course, that might introduce more pain and therefore more weakness in the market. But for the meantime, new supply coming to the market is unquestionably tight. I should say that obviously there's not a huge number of people on this call. And so if you do want to say something, ask questions, have a discussion, just unmute yourself and jump in. Let's have a chat. So this is the same data. This is the new listing volumes, but what it does is it says what is the new listing volumes in this particular month compared to what we saw the previous month. So along the 0%, that means that the numbers of new listings are identical to 12 months ago. If it's a bar chart that's above the line, that means more listings coming to the market than a year ago. Below the line means fewer listings compared to a year ago. And the red line is the overall trend over 6 months. Obviously, the standout here again is April 2020. Much fewer listings coming to the market in that month versus April 2019. Obvious reasons. Let's throw that away. Other than that, again, you can see the overall trend for the last 4 months has been we've seen significantly fewer listings coming to the market than 12 months ago. And again, December was a standout month. As I was indicating before, 40% down on 12 months ago, which is the biggest drop on a proportional basis than we've seen since I started collecting this data, except for the month of lockdown. So certainly it has been a tight market on the side of new supply for the last 4 months, and an extremely tight market for new listings in December. Number of sales, and this is where you've sort of got a balancing two halves here. You've got very low number of new listings coming to the market. We've also got low numbers of sales taking place. So it's kind of like you got vendors stepping back from the market and buyers stepping back from the market. Our number of deals getting done, are they dropping because the amount of supply coming to the market has dropped? There will be a certain degree to which that is the case. It's very hard to know exactly, but there are certainly concerns out there among the buyers, and your Tony Alexander surveys and everything show that sort of stuff. Very interesting, and certainly you can see that the number of deals that got done in December is significantly down on a year ago, and even more significantly down on 2 years ago. So 448 versus 871 back 2 years. That's half. So that's a massive chop in volumes. Just let someone else in. And again, the Tony Alexander surveys show, and other feedback we're getting from elsewhere in the market, be it real estate agents, mortgage brokers, and so on, they're all saying that the buyers have stepped back significantly in December. Why would that be? Well, there was an announcement on the 23rd of November, of course, where the Reserve Bank governor said, again, as I mentioned before, you guys are not slowing down your spending. If you don't slow down your spending, we're going to have to crush the economy to force you to slow down the spending. And that, of course, scares the bejeebers out of people. And so the buyers pull back from the market on that basis. So, yep, we have got a pullback on both sides here. So a reduction in the amount of new stock coming on and a reduction in the number of deals getting done. And that's the same data, again, in that different form. So you see there, the red line clearly shows that we have been seeing fewer sales taking place on an overall basis since middle of 2021. So for 18 months now. The peak of the market in terms of absolute prices or values didn't happen until October, November 2021, but the slowdown in activity and the slowdown in price rises really became quite apparent in February, March 2021. And in terms of number of sales, we saw it really starting to come through more like the middle of 2021. Again, look at the blue bar chart there. You'll see that sort of early-ish through to mid-2022, we were seeing a drop in sales volumes of sort of 35%. Broadly speaking, one sale out of three that were taking place a year ago was getting removed. And we started recovering there and up there in July, August 2022, we were back to almost par, but then we stepped back down to like 15, 20% down below. And the last couple of months, we've seen 30, 35% fewer sales taking place again, which is a similar sort of story as we saw sort of early-ish to mid 2022. So this is definitely a pulling back again of the buyers. How many days is it taking to sell? Again, you can see the interesting trend there. So from early 2022, which is what I was saying, you could start to see it coming through the slowdown from about February or March. And there you can see there was a significant increase in the duration to sell sort of right at the start of 2022. And that, you know, with a few sort of minor variations, the trend was distinctly upwards to a peak of 61 days in July. And this is where everything sort of started to change in Wellington is from about July, the market started stabilizing again, and you can see it quite clearly here in the duration it's taking to sell. The general trend has been significant reductions in the duration to sell, but then boop, up it goes again in December. So December was a strange month here over the last 6 months or so. Are we now going to see that trend continuing? Don't know. It certainly is a wee bit of a bucking of the trend there. Is it now going to stabilize? Who knows? But as I say, it's certainly been the odd month out, December, and because it's such a low volume month, I think it's fair to question whether it's valid or just a bit of a blip, a statistical aberration, if you like. And here we got inventory, and this is even more of a standout result for December. There you can see quite clearly the trend. Again, we were seeing significant increases in inventory. Then since July, again, the turning point, July, significant decreases in inventory. And in November last year, we were at, 13 weeks, I think it was. It looks like it was 13 weeks. And the long-term average for Wellington is 14 or 15, if I remember rightly. And so we were actually back down below the long-term average. But then, boom, December has blown that out of the water and shot right back up to the second greatest, the month with the second greatest recording of inventory since I started collecting this data in March 2015. So you can see there that is really a massive variation from trend. Is that a new trend, or is it just a total freak month? So we're just going to have to wait to see what happens when the January numbers come out. That being said, January is also a bit of a strange month. But we will certainly see a significant increase in number of new listings taking place. Number of deals taking place might not be quite as much of an increase, but anyway, let's just see another month's data before we start getting too worried about this really unusual or quite stark and not positive news for sellers, at least, that we're seeing in the December results. TradeMe listings, this is looking a bit more stable, and this sort of number doesn't change as quickly, of course, as some of the other metrics. So this might be more of an indicator as to what the trend is, rather than some of these other ones we've looked at, which have bounced around quite a bit. So just over 2,500 as of a day or two ago, versus just under 2,000 a year ago, and just over 1,000 2 years ago. So it reminds us, doesn't it, that 2 years ago, the amount of supply on the market was extremely short indeed. And you can see that here we are back here. That was really the absolute bottom of the market when it comes to gross supply levels. It went sideways for a period of time, and then it went significantly upwards, of course, as the number of sales that were taking place dropped right back, and so stock started to really build up, and we hit up to something like 160% of an increase over 12 months prior up here. But then since July, we saw things start to return back to more normal, or head towards more normal sort of levels. And then it kind of stabilized. A lot of buyers were expecting to see large amounts of new stock come on in spring. It didn't happen. We saw a small increase there in November, in October, as you can see. Sorry, that is November. But that's the spring rush. That's a very small spring rush, and it's a very late one as well. And then back in December and now January as well. So we've been going broadly sideways for the last few months, and certainly down from the peaks that we saw sort of March, April last year. We certainly are seeing new stock come onto the market now, as we typically do in sort of late January, and I expect that will continue for a couple of months. Often the change is when daylight savings comes off, or around that Easter time, sort of for any change. But overall, you see there, we are no longer seeing increases in TradeMe volumes. We're seeing overall the trend has been downwards, but we are in that time of the market now where we, from this month to next month, we will see an increase, but that's just seasonal normality. And as you can see there, look, we're only at 20%, 27% more listing volumes than we were a year ago. So from this point in the seasonal side of things, 27% is nothing compared to 100% more, which we were seeing quite frequently up to a few months ago. And the next one shows us the movement in the trend in that comparison from 12 months prior. And so again, you can very, very clearly see that trend. We were significantly increasing up to 160% more than 12 months prior. And since then, and again, that was in June. So again, consistent theme. Since July, the market has been heading back down towards more normal, or at least not getting worse anymore, starting to return to better conditions for sellers. Doesn't mean prices are going up, but perhaps going down at a slower rate, and the balance between supply and demand returning back to more of a normal market, so that it's not so much in buyers' favour. So clearly you can see that, and that's the 27% here. So 27% is the lowest increase, if you like, compared to 12 months prior, than we've seen since late 2021. So here we have just some other interesting graphs, which I've pulled out from Tony Alexander's premium newsletters. I hope he doesn't mind, and thanks to Tony, because the analysis he does is incredible. And what this is looking at is, how has Wellington performed? And some of you might see this stuff anyway. You might get his premium newsletters. I find them extremely valuable and good reads every week. But how has Wellington City performed, or Wellington region performed, compared to the rest of the country? And what might that mean for us going forward? So this here is what have been the changes in the house prices. Now, he says house prices, but he means the Real Estate Institute House Price Index, the same data I pay most attention to. The changes since November 2021. November 2021 was roughly the peak. I think Wellington peaked in October, but let's not squabble over 1 month. So you can see there that Wellington values have dropped more than any other region of the country. And Wellington City has dropped more than some other parts of Wellington. So, 22% or thereabouts is a significant price drop, and more than anywhere else in the city. Now, if we've dropped more than anywhere else in the city, that on its own would suggest, in absence of everything else, of course, and you can't do that, but on its own, of course, that would suggest, well, we've suffered more price falls than anywhere else. Surely other locations, all other things being equal, are more susceptible to price falls now than Wellington is. Auckland has been very similar. And that's, again, consistent with what I was talking about before, that the price rises on average in Auckland and Wellington over the last 5 years have been significantly less than in many other locations, and indeed across New Zealand as a country overall. Over the last 5 years, the markets have underperformed other locations. So what else we got here? This is change in house prices since before the pandemic. So the one on the left there is how much have we fallen since the peak of the market, and this one is how much have prices risen since before COVID struck and before lockdown happened. And of course, things went totally ballistic after lockdown. Well, Wellington City has only gone up, Wellington region has only gone up by 10% now since the lockdown. Only Dunedin underperforms Wellington, and that's 9%. So although Wellington's fallen further than anywhere else, Dunedin has risen the least since lockdown. So Dunedin didn't go up as far as Wellington did. Wellington fell further, but Dunedin overall has underperformed by 1% or so. Anyway, consistent theme here, Wellington and Auckland, again, underperforming almost everywhere else in the country. And so, if you're thinking that, well, we've still had big price increases since 2 years ago, this shows that, well, no, we haven't. We've only had a 10% price increase, which, I mean, some people might think that's big, but by most people's language, 10% in 2 years is not big. What about sales volumes? We've been talking about Wellington sales volumes being significantly down. Well, over the last 3 months, Wellington sales volumes, yes, they are down compared to the same 3-month period a year prior, but down by about the smallest percentage of anywhere in the country. So that would suggest that the Wellington market now is less weak relatively today or in the last 3 months than most other places in the country, just by looking at sales volumes alone. And places like Gisborne, they've suffered almost a cutting in half of the number of deals getting done. Auckland, over 40% fewer deals getting done. Wellington there is sort of 26, 27%. Nelson, similar. Marlborough, similar. Dunedin, similar. So this suggests that over the last 3 months at least, the Wellington market is not as weak as many other locations in the country. And this next graph here is not Wellington centric, it's Auckland centric. And I don't know if you guys have seen these graphs before, again, from Tony Alexander. What this shows us is over time, back to 1993, the orange line is, let's say the orange line is the relative value of Auckland properties as a ratio of the average New Zealand properties. So how expensive are Auckland properties compared to New Zealand prices countrywide? So if it's above 1, that means that Auckland prices are more expensive than New Zealand prices countrywide. If it's below 1, it means they're less expensive. Obviously, things have gone up, things have gone down relative to New Zealand overall. And the straight blue line here, that is it's probably a regression analysis, or it's the overall trend, showing that over time, Auckland prices compared to New Zealand prices have tended to increase faster. And so, and then it's saying, well, look at this orange line of where we are today, or where we are at this point in time, compared to its long-term trend of what it tends to revert to. And so going back sort of 8 years or so, you see there that Auckland prices were just like way more than where the long-term trend suggests they ought to be, or what is normal as a function of New Zealand prices. So that was saying back there in 2016-17, it would be expected that Auckland prices should have been about 10% more expensive than New Zealand on the whole, whereas in fact they were 35% more expensive. Now, since then, the relative positions have completely reversed, and Auckland values are now less than, they're like 96, 97% of New Zealand overall. And compared to where the long-term trend suggests they should be, which is about 115 or 114% of New Zealand prices overall, this would suggest that on that metric, Auckland prices are now about 20% below where they should be, if that long-term trend is correct. So again, that suggests that Auckland values, or Auckland market, is really significantly undervalued on that basis. Now, that doesn't mean Auckland prices will now go up. It might mean that the rest of the country has further to fall. Now, I haven't got the graph here, the equivalent graph for Wellington, but the shape of it over the last 10 years or 8 years or so is kind of similar with less extremes. We had our increase later than Auckland did, of course, and since the last 2-3 years, Wellington has been falling, whilst lifestyle locations have been booming more than Wellington. So Wellington's relative position has retracted, and it is down again below its normal long-term trend, again suggesting that Wellington is representing better value than it normally does on a long-term basis compared to the rest of the country. The gap between where it is now and what is the normal trend here in Auckland is bigger than the gap for Wellington. But the last time he did this analysis for Wellington was a few months ago. So that gap since then would have gotten bigger, I suggest. So on this basis, my suggestion is that if you're going to buy something, I think that the Auckland market and the Wellington market are now more defensive than most other places in the country, and offering better value according to these long-term kind of indicators. Anyway, that's kind of an aside, but I thought it was interesting and perhaps worth touching on. So in summary, folks, Wellington values are down again in December, but it's a strange month. Is it a blip? New listing volumes very, very low in December and low in the past 4 months. Sales volumes are down, especially in the last 2 months, but they have been down significantly for, gosh, the most part of a year now. Duration to sell got a bit longer in December, but overall the trend has been downwards. So it'll be interesting to see if we're now flatlining, or if we're going back into a longer duration to sell again. Inventory got much longer again in December, again significantly bucking the trend. It was heading downwards. So again, I'm questioning whether that's valid or whether it's just an aberration. TradeMe listings are normalising. They kind of have normalised really, but I expect in the next couple of months they will increase. But that increase is just seasonal, and it'll be interesting to see what the numbers look like compared to 12 months prior for the equivalent month a year ago. And so my message to buyers continues to be the same. Might be getting a bit boring, but that's too bad. It's the same. I would say continue to be out there, take advantage of these conditions while you can. They might not last forever. The big question mark I have on the horizon is will the Reserve Bank have to force us into a recession? It has to be said there's a reasonable chance that will happen. And if so, what will be the impact on unemployment? And then will that start to force a bit more softness in the market? Or will that be balanced if the Reserve Bank do a good job of interest rates coming back down again? Anyway, that's it for today. Any questions for anyone? Peter, you're welcome. Happy to have a discussion if anyone wants to.
Thanks, Adam. No, it's yeah, no.
Happy New Year, Peter. Happy New Year to you.
Yes, and you too. You too. Yes, back from sunny Hawaii, so back to sunny weather. So it's very good, just as good here.
Bloody nice.
Yeah, no, look, good to see the update. It's sort of what I'm feeling out there as well. So the update's in line with the expectations, and so it's. I personally think it's. if you're chasing capital gains or whatever, then I think this is a great time to be buying. Relatively so, but it's cash flow that we're after. So buy wisely, but I think it's, you're never going to pick the bottom, and if you say you were likely to be in the bottom 10%, then that's surely good enough to go out and start buying. If you're after capital gains.
I mean, it all depends what you're buying for, doesn't it, Peter? If you're buying a home, then it's not a financial decision so much.
No.
But no one wants to buy a home and then lose 20% of its value in the next 12 months. I mean, if I was a betting man, I would say that's just not going to happen. We've done it, and that's sort of consistent with what you're saying. What you're saying is that if we're not at the bottom now, we're bloody close to it. Is what you suspect. I mean, obviously, if you're an investor and you're looking to buy, then the hard part is just making the cash flow work, because your interest rates are very high, and the kicker or the killer is the loss of tax deductibility. You could, of course, take the position that, well, that tax deductibility is going to be returned, and interest rates aren't going to stay this high forever. And so therefore, once things do normalize again, then I'll be sitting pretty. And by the time they normalize again, then surely other investors will have recognized that and will be stepping back into the market, and prices will have adjusted, and you would have been better off buying now, perhaps.
Yeah, I mean, that's right. I mean, there is, on the other side, of course, we're seeing, I don't know about you, Adam, but we're seeing certainly pressure on rents. I was fortunate I managed to rent all my properties within a week, actually, so that was lucky. But my portfolio is down in rents. Only $85.
You've seen softness in rents in this peak season,
yeah, definitely. For 4 bedrooms and above, like 1, 2, and 3s are going out the door, no problem at all. But even 4s are a bit sticky, and 5, 6s, and so I got 7, 6, 5, 4, 3, 2, all those. But the 7, I was lucky to rent the 7, happy with that, same rent as last year. The 6s. Actually, the 6s have gone up slightly, but they were harder to rent. The 5's gone down, and the 4 stayed the same. So, I mean, I've spoken to other investors as well. They're seeing similar things, and a lot of that's also to do with, student immigration, etc. And if you look at those stats, they're starting to come back. I think there's a lot of rhetoric that the borders are open, but in reality, they're not. As far as the processing of these students, it's just not happening. But the numbers are certainly up from a year ago, and hopefully, in 12 months' time, we'll be back to some sort of normality on a rental basis. So it's not only about the buying of the property; it's also the the demand for the rent that you're putting in. But I'm talking sort of Wellington City. I'm not really looking at the huts, the suburbs. But that's sort of certainly what I've been seeing, Adam. Anyway, in the weakness I've been back.
Yeah. So obviously, Peter, you're saying you rented a 2-bed flat in up for more than market rent. Well, okay, more than market rent. What we're talking about is the movement of market rent itself, I think. But I mean, so it's interesting, because I've had a couple of 5 bedrooms where we've just tweaked the rent up, sort of by $5 a bedroom each. And they've gone okay, but I mean, that doesn't mean the market rent increased. It might have meant that I was under renting it slightly,
Yeah, it's all relative. But I mean, I've spoken to a number of people, and they're seeing similar things. Also, a number of large investors have sold a few, starting to sell a few, which is from our, I guess, a good thing as far as reducing the volume for of rentals. So puts pressure on rents to go up. So.
I mean, it depends who they sell them to, of course, but
they're selling them to home buyers, as a matter of fact.
Yeah.
So, if you've got a portfolio of properties, and if you're looking to exit the market, you'd be looking at first-time buyers more than investors, right? Or second.
Oh, yeah. You'd be selling your 3-bedroom house in Newlands rather than your 3-flat property in Newtown.
Yeah, 100% right. So there's a little trend. I think that'll start to flow through in the stats down the track a little bit. Adam, I think it's certainly a trend that I've been seeing in the last little bit.
Because the numbers are actually showing that net immigration is positive, and the movement has been quite sudden and faster and bigger than what most commentators were predicting. So that, of course, is encouraging.
It's just showing the immigration by visa type. It's showing the New Zealand and Australian citizens, where the trend has been going right up till December this year. So we follow.
New Zealand and Australian citizens.
Yeah, so it's basically looking at New Zealand and Australian citizens that are coming into the country as far as they're coming for visa, their work visa, student, visitor, or residence, and there's a sharp increase in work visas coming up. The last couple of months, I
understand that we're still losing Kiwis on a net basis, but we're gaining foreigners on a net
basis. That's consistent with my rental experience. I don't know if you've exhibited the same, Adam, but normally I get about 80 to 90% of my students staying on. This year I've had 80 to 90% leave.
Right.
And when you talk to them about what are their plans are, half of that lot are looking to go offshore, looking to go to Australia. And we've never had that many, so never heard that before.
Well, that's a good. I mean, is that a trend or is that just a catch up because people couldn't go for 3 years? It might just be we got 3 years worth of people leaving in 1 year. Once they're gone, then it'll return to normal.
Yeah, and that could be true too. I was just saying what I've seen them, from my. Have you experienced something similar, or your stay?
To be honest with you, I don't really. I'm not close to who my tenants are. The property managers take care of that, and I don't really know who's in there.
Right.
Yeah. But I mean, my impression is that most of our tenants are. I don't think I've got a lot of foreigners.
Right.
No, just regular old locals.
Yeah.
Yep.
Okay.
Oh, that's very interesting, Peter. Yep, appreciate you sharing your insight there. I mean, my experience has been that the rental market was very soft in the middle of last year as the borders opened, and whilst they remained soft, they became less soft later in the year. And feedback I've had, I've not looked at any numbers, but just anecdotal feedback I've had from our property managers and so on, is that there's good levels of activity out there from tenants.
Well, sort of a funny thing, you remember in the stuff, every year you saw the same photo of all those tenants queuing up outside of Mount Cook property.
Yeah.
Which we've seen every year for about the last 10, the same photo. I don't think we're going to see that this year.
No. Yeah. All right. Well, that seems to be it. So yeah, you guys have a great month. See you at the meeting next month. If anyone wants any advice or anything, just sing out, how to find me. Take care.
Yeah, it'll be a good meeting too. Matthew Ryan's coming along.
Oh yeah, Matthew Ryan. That'll be fascinating.
Mm.
Yeah, very good. All right, guys. Thanks.
All right.